This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Monday, July 14th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn up 3 at $3.99. August soybeans were up a penny at 10.05 1/4, and September Chicago wheat was up 4 at 5.49. No no export sales announcements here this morning, so we'll jump right in. We're going to get NOPA crush numbers out tomorrow. 185.195 is the estimate, so we'll take a look there. But outside of that, over the weekend here, announcement from the White House, looks like 30% tariffs supposed to go into effect August 1 for Mexico and the EU. I know there's still quite a bit of negotiating that's going on here as we approach that deadline, so there's still time for deals, but you know, that certainly got people riled up a little bit over the weekend. Good wains. We were talking about it before the show. You know, you look at the radar and we continue to see water rolling through a real important part of the Corn Belt. So that still seems to be taking place. And now that we've got the report behind us, I think we'll just jump right in, start there. Justin, welcome back. I guess, you know, a lot going on. It seems like we're bobbing and weaving here every single day, but you know, I guess maybe some post-report thoughts. We're going to take July off the board here today, and I guess what your overall opinion of the market is.
Yeah, thanks, Dan. You know, obviously, I you know, the report wasn't bearish; it was actually friendly. But it seems like the fund selling or whoever wanted to sell was kind of teed up to sell the number no matter what, in my opinion. Kind of the way it acted. You know, pressing it lower until it doesn't work. You know, last night kind of gap lower, pressed hard, ended up higher, almost took out yesterday's highs in December corn. So definitely getting kind of oversold here. I think ahead of our skis, the analysts, you know, every day that we're lower, raising the yield estimate, you know, 184, 185, 186, 188, whatever, whoever can write the highest number down. Now the weather's been really good, you know, so I would say there's, you know, the potential certainly there, but as we were talking before the show, we're just tasseling in a lot of areas, just starting to go into pollination. And to make, you know, those kind of numbers on a national level on 95 million acres, you have to finish strong all the way through September. You've got to fill really good. You know, so you need, you know, an inch of rain a week at least, continue. You need cool nights. You need a lot of different factors to get those really over the top yields across majority of acres. So I think there's enough problem areas that, you know, to write down those kind of numbers today is pretty silly for what we know. Now you could say the potential's there. You could say obviously the rains are good and crops are looking great, which they are. And I drove around, you know, taking the kids to sports camp in Dubuque, and, you know, visiting my parents in Western Illinois and some family up in Wisconsin, and looks about as good as it's looked on today's date. So certainly the potential's there. You know, question is, are we getting a little ahead of ourselves or not? You know, and until it stops working, as we've talked about, you know, the funds can, you know, feel like they're going to continue to sell. I think you're getting some farmer panic helping, getting some sales, all things that I heard you guys talking on the show. So yeah, I think obviously it's all about yield. This, you know, at this level, obviously there's trade talks and things that we've talked about a lot on the show that are also kind of negative right now, or negative fear. So there's really hasn't been a good bullish catalyst. You know, even like we said, the report was, you know, I think friendly, but that's just not what's on the, you know, that's not what's in the target right now. It's all rains and yield and negative stuff. So.
Very good. Dustin, what's on your mind as we start the week?
Well, I mean, you compare this to the long-term forecast that you got, you know, a couple months ago. This is probably the worst drought ever. You know, We have had a lot of rain. Forecast just got wetter again. But Justin kind of made a point that, the min temps over the next 2 weeks are still going to be quite warm. But we are still looking at quite a bit of rain. It's so hard at this time when things are looking this good to find anything real positive in the market. But we got to also remember where we stand in relation to where we started the year, where break evens are, and just the knowledge that with the stronger farm bill, you're likely to see probably better revenues for the average grower at $3.50 corn than you are at $4 corn. So that definitely changes the way I think that we should market, because if there is something to turn it around, maybe it's trade deal, maybe it's duratio, who knows what can happen. You don't want to be stuck with no support from farm bill because the market's actually risen again, and then a bunch of sub $4 cash corn sales, which is a possibility. We saw it happen in 20 going into 21. So I'm just trying to keep balance, and I'm watching geopolitical events for the next direction.
Hey, Ben, how you doing this morning?
I'm good. How are you guys?
Good, buddy.
I think that something that's worth mentioning is that, Justin brought up the analysts about cranking up yield on every tick lower. And when you look at the report, we've had a record South American corn crop. We dodged a bullet with the CONAB number. It wasn't nearly as big as some private analysts. We're going to have a big corn crop. How big, it remains to be seen. But we've done all that, and we still knocked, we knocked global stocks down a decent amount. So, when you look at the overall picture of corn, is we have to have kind of, I think, a bigger picture view, because we haven't solved all the global corn demand problems, and you're down to the U.S., Brazil, and Ukraine for exportable supplies. So I think eventually we find our footing, and corn has another, unless we're at the high end of some of these estimates, which is possible. The outlook for corn is we still haven't done anything material to build up global corn stocks. We may be choking on it in the U.S. for a few months, but I think it's worth noting, like, how far do you want to push this down? My gut is that at some point over the next 8 or 9 months, that some end users will look back and look at $4 corn and wishing that they maybe would have had a little more coverage. But again, we have a long way to go to get there. But 2 really good crops, and we're still knocking global supplies down. So I think that's a little bit of the silver lining here. It doesn't do a lot in the short term if we're 185 or whatever the next big. I saw someone throwing out 200 kind of facetiously, but not really. So the commodity markets are there's hyperbole, and that's why we overshoot to the downside and we overshoot to the upside. So we'll see how this plays out. But I think a huge gift on the Farm Bill, by giving people the better of PLC and Ark County are tremendous lean. So we'll see how it plays out.
Yeah, history-wise too, now it depends on weather, but I think since 2019, the final yield has been lower than the May WASDE estimate in every year for corn. Wow. So, kind of going back to, when we look back at starting the year 181, it's like we haven't hit above 180. We haven't hit trend in a number of years. Now, eventually that'll happen probably. But now we've kind of thrown all that aside, and let's see how far we can go above trend.
Yeah.
So it's just a change in attitude, right? Price dictates people's perception of fundamentals a lot of times. This is nothing new. This has been happening since the exchanges have been open, but it's just more loud now, right? There's a lot of social media, a lot of opinions out there that are easy to find. So,
well, and I think that initially when a couple of months ago, people that said, "Oh, we can never hit those numbers on export demand. They're way too lofty." And I would counter that now with saying it's absolutely possible. You need China to show up. It's absolutely possible if you look at global corn stocks. So corn should not be, and you look over the horizon into 26, like there's not a lot of people will be excited about planting 450 D's 26 corn and we still have, unless they continue to just ratchet up South America, and the US is a monster crop. We haven't built the cushion in global corn stocks. So
that brings up a good point, guys. Dustin, what's your thoughts on spreads, the way that they've acted, I guess, the last week or so? I mean, we still continue to see pretty good carries out there, don't we?
Yeah, no, really good carries. I mean, we've got, fairly large risk-free rates from what we would have had the last time we had big carries, right? I think that the market is certainly pricing in an above trend line yield, in my opinion, which if we are at a 186 national yield, it makes sense that we need big carries. We're going to have a lot of supply. The interest expense, I think a lot of people are realizing that the last year, especially, that interest expense really does weigh on profitability quite a bit. So you're going to need to get that incentive to carry it for longer, to overcome that. I think the market's responding with that. The other thing, I know we've talked about this a lot in the past, but just as a refresher, the monthly storage rates, CME warehouse receipt costs approximately 8 cents a month. That change happened in December 2019. It had been approximately 5 cents a month prior to that. So, in my career, there's only one time that I really saw like D's at full carry, for example, was 2008. And at the time, I think we went to like 65 under D's of 08 to D's of 09. But, we had financial insolvency. There was big questions even about CME credibility at the time. Like everyone was worried about liquidity. And so it made sense when we had carryouts and we went to full carry market back then. Well, full carry today, that was 65, 66 back then. It's more like $1.22 right now. So it would be an interesting thing if we did get like a crazy record yield to see what spreads are capable of doing. Because if we have 95 million corn acres in 2025, how are those acres going to be pointed in 2026? They're going to be pointed back towards the bean rotation. So you may get a surprise on how wide spreads could ultimately get if we are just getting that huge, crushingly large yield. Even though, Justin, you've made this point a couple times, we have near pipeline carry in. So that's the one thing that's kind of holding me back from wanting to get super bearish spreads. But if we just get too large of a production, it's possible.
But you could still see, just because of that, you could see D's forward spreads be really wide, because by then you should have enough harvested, all those kinds of things, and you could see really interesting things with basis. Mm-hmm. Or, it's kind of what I think were really crazy things with basis between now and, October 1st or something, especially in like deficit areas. If you've got a sub 1.3 carry out, you're going to have really tight areas.
Yeah.
In the country going into harvest. And especially if you have any kind of harvest delays on the river system, like you could see some interesting things with maybe even the SEP futures. That's kind of why it's a widow maker, because if you try to be long it, you can get absolutely murdered with how wide spreads can get. And if you try to be short it could be anything. So.
Oh yeah, for sure. Yeah. And just thinking about that, the spread, I mean, when you get to that end, that time frame where, if we're still, let's say we have, import tariffs in Japan and they've retaliated at that point in time. And now we're kind of picking some fights with Mexico, obviously too. Our markets are really geared to go downriver, right? These board trade markets. So like if we're going to have to rely completely on a domestic market and we're pushing the bounds, the low end bounds of where price can go because we're in the middle of a trade war, it could be a very interesting basis situation because the markets are allowed to go to larger carries. That was the intent of them, is that greater fungibility. Is like you want to fix a basis problem, you have to push flat price lower, right? Go create that demand. And if it's domestic demand, it's not really geared for an ethanol plant to go source grain through the delivery system, get it back off of a barge to go crush it for ethanol, right? That's really geared to go downriver.
Mm-hmm. Yeah, good point.
All right, guys, very good. We're just got a couple minutes here. Ryland, strong close Friday for cattle on the back end of another sharply higher cash trade. And then, hogs are kind of at an interesting technical spot here for this week. So I guess share some thoughts as we start the weekend, livestock.
Yeah, absolutely. A good close, new highs for the move, new contract highs here. I mean, no question about it. It's just good news pretty much all around. If you don't look at the box beef market, box beef has just been cratering. So packer margins are definitely getting squeezed here. So I think just overall, you have everybody kind of looking at it with fresh eyes over the weekend, saying, okay, there's obviously a lot to do here. I mean, we're seeing prices that we pretty much didn't think were possible. But on the other hand, all the news that we've gotten over the past week has been just very, very supportive, especially in the long term with border closures, potential tariffs on August 1st. So hopefully we see a little bit of, a little bit of detail on how this is all going to go August 1, if we're going to see some negotiations, if we're going to see the, potential plan for the U.S.-Mexican border. But overall, I mean, the market has really just not seen a setback that's able to last or take out any real kind of technical support areas. So, yeah, I mean, we're just kind of watching, seeing how things shape up today. But, yeah, cash was $4 to $6 higher in the south and 8 to 10 higher in the north. So, I mean, there's just not really any bad news to really hurt this thing outside of, hey, I'm long and I'm making a bunch of money. Let's take some profit here. I mean, I think that's kind of on everybody's mind that's been able to ride this wave. On the producer side of things, it's been a gravy train. It's been easy just to kind of get some protection in place and set it and forget it kind of thing. But now we're at these price levels where it's gone so far so fast. May want to reevaluate, may want to look at what else is on the table if you can get those floor prices higher. But yeah, I mean, obviously the longer term trend is still friendly. Obviously, we're going to see some setbacks when the market gets to these overbought levels, but overall, that seems like the trend is still your friend there. And as far as the hog market, yeah, new lows for the move in hogs. A little bit of concern that we're starting to see some of the product market suffer seasonally. It just feels like things are backing off a little bit. You had a $12 break in bellies, and carcass was just a little bit weaker. And we are starting to see some of that in the cash market. So we're going to see if we can kind of narrow things up a bit with the July futures going off the board. So overall, it just kind of feels like everybody's kind of looking at August, seeing what kind of premium discount should be on there, what the basis is going to be like. But overall, you got this the tariffs on Canada August 1. There's kind of some new information, and I just think overall the market's going to see that as pretty much negative longer term if they do go into effect. So I think there's a lot more downside risk in the hog market than one would expect here. So just keeping an eye on the product markets for now.
All right, appreciate the update there, Ray. Just came into the open. We got September corns up 2.5 right now, 398.5. August beans are unchanged, 10.04 1/4. And September Chicago wheat's up 1.5 pennies at 546.5. Now we're going to get crop conditions out here 3 o'clock Central today. We'll take a look at those tonight and visit about that in the war room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with the AgYield. So again, thanks to everybody that supports the show. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good show. Hope everybody has a good start to the week. I'll talk to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.